Here today we're to explain during a deal when we have a invoice that needs to be created for a repair order for items that you're going to sell on the deal. In this case, let's look at those. This is my deal, 45829, and this is my stock item. I'm going to open my piece of inventory. Notice that I do have a repair order that has been charged to this particular piece of inventory. My invoice amount was $28,750. My repair order was $27.24, and that was charged back to my piece of inventory. Let's go look at that repair order. This was an internal repair order that was created for the items that were going to be sold in the deal. Notice my repair order type is internal, my customer name, my piece of inventory. When I go to my parts inventory tab, it was a hitch and a mud dauber that was part of this particular deal. So the customer is not going to charge any extra expense. He's not going to pay me. We are going to charge this back to the unit, if you will. So in my General and Information Cash Out tab, I'm going to close this with an internal. Let's look at the other pieces of this deal, and then we'll go to QuickBooks and see how this deal equates in the accounting world. Taxes, calculated state by 2%, county at 1%. Would apply to any trade, which we're not showing a trade here today, and on any items it will be charged at the same percentage. See our totals here. Our item price, we're charging for a prep fee, a title fee, a registration fee, and a document fee. The prep fee and our document fee we are claiming as pure income, whereas the title fee and the registration fee, we are collecting these, in our case, on behalf of the state, and we will turn these funds over to the state. We have also sold an extended warranty to this particular customer. Anything in the aftermarket area, we need to claim profit for that, and we do so in our profit accounting process, so let's go there and show you that. Under the back profit, here my extended warranty was the 2037 we saw a moment ago. Previously I had entered, and my cost for selling this was $907, which means I will have to remit to that company $907. The difference being my profit of $1,130, and we can see that down here as a bottom line. That is the only aftermarket product that I have. If I come back to my front profit tab, I can see that my original cost of my vehicle was $2,750. My vehicle adjustment was my repair order for $27.24, and my total cost is $2877.24. We're going to see these numbers here in accounting in a moment. When you're ready to finalize your deal, you're going to click your Wash button. It'll ask you if you want to review those add-ons. If you'd like to see them, you can click Yes. It'll show you the bottom portion of the screen. And when you continue with Wash, you will get a nice washout report. Down here at the bottom, it will show you your total profit, your back profit, and your front profit. This document is nice to have when you're the accounting person and you're ready to bring this over to QuickBooks. It has something that you need to go by. How could this be out of balance? For example, you sold an aftermarket product such as your extended warranty, and you did not enter your cost information. It wouldn't pull that over correctly. So you need some source document to make sure that your bottom line that you're pulling into your accounting window is what you're after. Let's say yes to reopen our deal form, and let's see what our bottom line total is that we're looking for. We're looking for $37,397.66. Here I've gone to my Office Operations tab, and I've found my end of day that I've created for my transaction to show you. This is my repair order, my 31254. We closed it out with an internal payment type. My part was $27.24. My cost for that part was $14.71 with a total of $27.24. I have processed this, which means this transaction is now over in QuickBooks. When I was looking at my deal, I don't know if you noticed, but it too had also been posted over in QuickBooks, and I know that because of this posted right here. However, if that had not been the case when we had gone through the profit accounting, it would have been posted at that time. So previously, when this piece of inventory was received in, it too had gone to QuickBooks. So now I have all three items, my piece of inventory in QuickBooks, my repair order that has been charged back to my piece of inventory, that repair order has been closed, and the piece of inventory has been sold. And that deal has been put over into QuickBooks. Let's go see what those look like in QuickBooks now. Here, excuse me, here's the transaction for end of day for the internal repair order that has come across to QuickBooks. That was the only thing in this particular end of day. My internal payment, here's $27.24. My cost of goods for the part, which I'm relieving parts cost of goods, is $14.71. I'm charging this to internal sales, and I'm also charging inventory assets. Some dealerships prefer to break out inventory assets in between inventory assets and inventory asset add-ons. The advantage of breaking those out is at any time that you quickly look into QuickBooks, you can see exactly what those dollars were in addition to the invoice amount. So again, you can do that as you wish. With that transaction, we saw 4 different accounts be affected. Let's see how those are mapped over to the chart of accounts. First, let's look at our internal payment, which is mapped to our inventory asset account. Next was our part cost of goods, and that's mapped over to our chart of accounts part cost of goods. Next, we have internal sales, and we have that mapped here to internal sales. Let's see a little bit more about that particular one. That is our income account. Okay. And the next was our inventory asset account. And again, you can have that broken down in between your inventory asset, which would be your invoice amount, and the add-ons. And again, if you'd like to look at this, that's mapped to our other current assets. Let's now go look at the deal. Mr. Leslie Howard has bought my piece of inventory, and we start off by, we had charged him a prep fee. That was on my item detail tab. We said that was going to be collected and turned around and sent to the appropriate agency, as well as the title certificate and the motor vehicle transfer fee. Excuse me, the prep charge we were going to include as income. The title certificate and the motor vehicle transfer fee we were going to turn around and pay to the state or some appropriate agency. The document fee of $50 we were also going to include as income to the bottom line. Cost of payable of extended warranty. We owe the company that we sold the extended warranty policy $907. The profit on that was $1,130. In my inventory asset account here, this is my invoice of my repair order now that my inventory has closed, that we need to affect that. Here's my net selling price. I have state, county, and local taxes. My inventory cost of goods. Notice that my inventory cost of goods is $28,777.24. That is my invoice amount plus my repair order. Let's run a profit and loss. We've ran it for the transaction for today. Notice here that under the income, we have our document fee of $50. Our income from our extended warranty was $1,130. We have internal part sales income of $27.24. This was a sale of our vehicle. We included our PDI to a bottom line for a total income of $30,221.74. When we come down to our cost of goods section, for our part inventory cost of goods for those items that we charged on the repair order was $14.71. Now that the item is sold, I see that here. And my inventory cost of goods is increased by the $27.24 to be $28.77.24, which a total gross profit of $64.29.79. Let's look at the gross profit here and tie it back to DealerLogic. Here the document fee of $50 is shown. Here are my profit and loss statement, and within DealerLogic then we have our $50 fee. Next is our extended warranty. On our extended warranty screen, we've entered $2,037. On our profit accounting screen, we entered $907 that we owed the extended warranty company for those services. So our net profit is $1,130. The $27.24 is coming from that repair order of $27.24 that we cashed out to my piece of inventory. My net selling price of $3,400 is coming from my net selling price. My $14.51 is coming from my item detail tab. I have my prep or my PDI directly mapped to my income account. Excuse me. If we back up and add those up, $50 plus $1,027, $5,014 is $6,444.50. If I subtract out my cost of goods on that repair order for items used, $14.71, which gives me a gross profit on my unit of $6,429.79, and again, that is my net income or my bottom line. This is my end of day that is in QuickBooks. There's nothing else on this end of day to make that easy for you to see. Excuse me. This is the deal, and notice that here for my $27.24, now that the deal is sold, we're leaving our inventory asset account as well. If you would like to see all of the individual items listing, please refer to the PDF files below for those items and their associated chart of accounts. Thank you.